as well as the outlook going forward. But to analyze the numbers further, we are now joined by Abneesh Roy of Edelweiss Securities. Abneesh, good morning and thanks a lot for joining us. This is Pavitra. So you just heard out the management. I mean, it has been a top-down beat for the company, no two ways about that. But it is really the management comments which are a little bit, shaky. So they are talking about higher volatility in the prices of commodities in Q2. How much of a margin hit are you penciling in going forward?
So definitely, HUL remains one of our top high conviction buy ideas. See, HUL management, if you see their earlier commentary also, they have been quite conservative. If you go back to the Q4 con call and then you see a Q1 FY23 numbers where revenue was up 20%, EBITDA 14% up, volume growth 6% up. Clearly, management is conservative. HUL is a gold standard in terms of execution. If you see Nielsen FMCG numbers, HUL has clearly outperformed both rural and urban in terms of volume growth and price growth also. I think tea is a very good case study in front of us where HUL has seen market share expansion in both value and volume terms and also has seen margin expansion, both HUL and Tata. So definitely I expect that we should see good margin recovery in H2. Q2, you are partially right because there is a 2 to 3 months of lag, plus rupee continues to depreciate and crude has still not come to comfort level. I think the real margin expansion will happen in H2. This is how we are also expecting.
Could you quantify what the margin trajectory actually is, the extent of correction that you expect in Q2 and thereafter the recovery?
So we expect the improvement in margins to happen in H2. Q2, there will be the 2 to 3 months of lag. Correction will happen in palm oil related categories. So in soaps, I do expect 300 to 400 bips improvement in gross margins and possibly even EBITDA margins. Ad spends will go up, but not meaningfully. So, in rest of the categories, crude and rupee continues to remain a concern. So we have in fact upgraded our EPS estimate by 3% and 6% for FY23 and 24 for HUL. We have been a bit conservative given monsoon. If you see UP, Bihar, Jharkhand and Bengal, 40% of the population, there is a big deficit currently. Plus rupee continues to remain an issue. Plus crude has still not come back. So my sense is these numbers are conservative. But yes, we do expect that in H2, soap category will see a good improvement. And on an overall basis also, HUL should start seeing margin expansion, possibly on an overall company level, I think 50 to 100 bips. They should start going back in FY24 definitely to the band of margins of 24 to 25% EBITDA margins.
Hi, Abneesh, morning. The headwinds which have been there for HUL are pretty much, standard across the sector. Therefore, would it be correct to extrapolate that the kind of volume growth they have seen is something that could be mirrored by other companies as well in this sector?
So we in fact see 6 key takeaways for the sector from this result. No, HUL is a gold standard, plus HUL is getting benefit of mobility fully coming back. In spite of that, we do see, for example, Dabur's fruit juice business, Varun beverages, beer companies, Imami cooling hair oil, see very strong volume growth because of summer being very harsh. We are also going to see mobility fully coming back. So we will see, for example, hair color business of GCPL do really well. We will also see price hikes being the main growth driver for most of the companies, and gross margin compression for most of the FMCG companies except Marico and Tata Consumer will be quite sharp. So we should be cognizant of that in Q1 and Q2 both, as I said. So yes, we cannot extrapolate this, but I think there should be good numbers by ITC. Also Asian Paints, those should do well. Even United Spirits, because of the soft base, should see good YOY, but we'll see gross margin compression of around 400 bips on a YOY basis.
Okay, and Abneesh, for HUL, we were looking at the different segments. So food and beverages is where we have seen a little bit of a contraction in revenue growth. Do you think this is something that's likely to continue? It's currently at 9.3 versus the 10 to 12% that we saw.
That's happening because of the tea, essentially. Tea, there is a deflation of around 5 to 6%. If you remember, in tea, the raw material has corrected sharply on YOY basis. So all the tea companies have passed on more promotions, slight price offs, etc. That is bringing it down. But on a volume growth and even on a value growth, both HUL and Tata are gaining market share versus the regional players.
What would be your read for the rest of the pack?
The rest of the pack, essentially, I think we'll have to be very selective. Already the update is out from Marico, GCPL, Dabur, etc. So we will expect Dabur, for example, report good volume growth on a high base because fruit juice business will do well. But for GCPL and Marico, it will be a negative volumes. We do expect Asian Paints also to do quite well. We are also seeing downtrending benefits for noodles and biscuits from street food. So that should help Britannia and Nestle going ahead. So these will be the key takeaways for us from the results. Of course, ad spend also still coming back and there will be good cost control in terms of staff and other costs. So EBITDA margin pressure will be lower, but gross margin pressure will be on the higher side.
So Abneesh, HUL itself has run up, 15% in July itself. And, I understand you have a buy rating as does everybody else. So what is the headroom from here? Where's the stock headed?
So in FMCG, how it works is when you see these periods where there is a commodity deflation benefit, you see suddenly the earnings growth in those segments being very strong. I think Tata Consumer stands out. You saw last 2-3 quarters, very strong EBITDA growth. I think that's what will happen selectively in FMCG. You will see, for example, biscuit companies, soap companies, noodle companies see good earnings momentum starting H2. And FY24 should also be good because of the price hikes taken and commodity deflation being seen because of the global risk off and liquidity drying. So whenever such a thing happens, volume growth also picks up. So what will happen is companies will give 3+1 free, for example, more promotions, more grammage addition. That will prop up the volumes also. So I would expect that this industry should see a strong EBITDA growth and earnings growth in H2 and FY24. Yes, you're absolutely right. The P multiples are not cheap, but I do expect earnings growth to really drive the stock from here. I expect HUL to touch all-time high in the next 2 quarters. I expect that and also go beyond that in the next 1 year.
All right, Abneesh, you're sounding optimistic as ever on HUL. Thank you very much for joining us and taking us through your outlook. Abneesh has a buy rating on the stock with a target of 3,050. It's currently at 2607. So that is on HUL. With that, we're going to get into a short break now. But up next, we're going to discuss what's going on in the world of commodities. Manisha Gupta will be with us.